The 117 that we got last week Friday, to put it into context, that's the lowest figure this year. All right, with the highest figure ranging within the early 300,000s. All right, so we're way off the pace, way off the pace. And as far as that's concerned, and this is signaling an unemployment recession. Now, this indicator, which is triggered when there's a rapid rise in unemployment rate, what we're talking about has correctly predicted every single recession since the Second World War, guys. All right, when jobs slip below 130, it signals an impending recession, and it's been right ever since World War II. So again, make of that what you will. But I think that it's fair to classify this partly as people unwinding some of their positions that they've been holding. Imagine if you've been bullish on NASDAQ for the past 3 to 4 months, all right? This would be the time to take the money off the table after reaching those historic highs. Imagine if you've been bullish on the Dow Jones for the past 6 months. This would be the time to take the money off the table, all right? So it's a bit hard to extrapolate too strongly into the future where we will be in the next 2 months, all right? Which is why the next few points of data, guys, are going to be more closely watched than ever before, all right? Particularly inflation data, employment data, and economic growth data, all right? Now, in as far as the economic activity and the economic data from yesterday, some of the data that we got put a temporary floor underneath the US dollar after we got that upbeat services PMI data, all right? Now, the data showed us that the services sector expanded to 51.4 and from a previous figure from 48.8, all right? So it went from 48.8 to 51.4. Now, when it comes to this PMI data, guys, you need to be cognizant of the fact that a reading above 50 is positive for the US dollar and indicates expansion, whereas a figure below 50 indicates a contraction, meaning that there's a slowdown in economic activity within that sector, all right? Now, I spoke about the euro earlier, and I want to unpack why the euro is the last man standing, and as far as the major currencies against the dollar, it seems to be outperforming everything else. Now, on the Eurozone front, we're seeing stubborn inflation, all right? We got that inflation data from June, and it's raising doubts over those expectations that we had of an interest rate cut from the ECB. Now, just unpack that statement for a moment. Inflation in the Eurozone is high. Inflation in the US is coming down. The labor market in the Eurozone is still healthy. The labor market in the US is going to shit, all right? We've got this interest rate divergence now coming into play, where global markets are expecting the US to cut rates to a larger degree than first initially thought, all right? And whereas on the ECB, we're seeing some doubts over a possible interest rate cut. So I think that could be one of the reasons that demand is flowing from the dollar towards the euro on the prospect of the euro remaining more resilient through this period where we have a mass sell-off on the dollar because of those growth concerns. Now, in response to that, we saw the Euro USD hit a 7-month high, guys, on Monday in the US session, all right? The major currency pair strengthened as the US dollar plummeted, and that's amid the growing speculation that the Fed could announce emergency rate cuts on the back of that lower NFP and to quell some of these fears of an unemployment recession, all right? Now, there's growing speculation that the Fed could announce those rate cuts, specifically because the risks have now widened to both components of their dual mandate, all right? Now, I'll unpack it again. I always say this, guys. What is the Fed's dual mandate? Without using ChatGPT, can anyone answer me in the chat, please, guys? Without using ChatGPT, I beg. What is the dual mandate of the Fed? All right, because both are at risk right now, which is why the dollar is melting. If you understand this intuitively, you'll understand what's going on in the US dollar and across global markets. So I'll give you guys 60 seconds. Anybody? I'm waiting, guys. Surely. What is the dual mandate of the Fed? All right. What is Jerome Powell's main priorities? There's two of them. All right, here we go. Musa Milnana says, bring down the interest rate without causing recession. Well, that's their aim, to get the economy landing softly. All right, that's not their priority. That's what they have to do to bring down the interest rate without causing recession. Right, that's what they're trying to do, but that's not their main mandate. All right, they're tasked with two mandates. All right, Martin said the same thing. Bring down inflation without causing the labor market some panic. All right, I'll give it to you guys. All right, the Fed has two mandates, guys. Maintaining price stability. That means keeping inflation at acceptable levels. We know what the acceptable levels are. They say it all the time. 2%, we're at 2.5%. Number two, creating economic conditions that can achieve maximum employment. All right, so there we have it. Two, they need to keep inflation steady. They need to create maximum employment. Right now, those two things are at risk. Would you agree or not? Let me know. All right? I mean, we can clearly see that the second one, achieving maximum employment, that's definitely at risk right now. The NFP figure and unemployment rate tell us that. What about maintaining price stability? Inflation is sitting at 2.5%. They need to get it at 2%. So both mandates are definitely at risk. Shout out to Queen Caroline. I didn't greet you. How you doing, girl? All right. Now, if you understand those two things, guys, you know exactly what to do with the data that comes out. All right. We got the PMI data yesterday. All right. Services PMI. And it said to us that services industry is expanding. All right. Which is good for the Fed. And that's why you're seeing a resurgence in the dollar. All right. That's why you're seeing a pullback. All right. All this information, guys, if you really understand what these people are trying to do, then you know what to do in response to the economic data, because you know how they're going to respond to the economic data. And ultimately, what we're trading is the Fed's monetary policy. Plain and simple. All right. Queen Carolina says the geopolitical climate isn't helping for now to stimulate economic growth that can generate jobs. That too. All right. All right, before I take some questions, let's unpack what's on the economic calendar this week. It's a pretty light and mild calendar. We saw through those services PMI data indicating expansion in the industry. That's good for the USD. Tomorrow we've got crude oil inventory, so if you are trading oil, that might be your baby. The big one, in my view, could be incorrect, but in my view, I think initial jobless claims is going to take on a greater importance this week, particularly because it is the first piece of employment data that the market will get to assess after NFP. All right, so initial jobless claims this week is going to be really, really important. And on that front, we're expecting lower claims. Last week's claims were sitting at 249,000. We're expecting that to moderate all the way to 245. All right, boys and girls. And with that being said, the fastest 30 minutes online has come to its natural conclusion, guys. We play all right? Here we go. Let me know. Bring your comments down below. Boys, come greet our lovely people.
What's up?
Greet our lovely people.
Good.
All right?
High in the dub. Good.
Don't know. All I know is it's a bloodbath.
Are you my G? Yeah, they say when it's a fearful ones, we have to buy, eh?
G47 in the building, guys.
Yeah.
G47 in the building, guys.
Yesterday, one guy 200 Bitcoin bought, bro. The
200?
whales are pumping. Yeah. It's time to pump now.
All right, guys.
Pump and dump.
When the market is fearful, this is the perfect opportunity to be aggressive. When the market is aggressive, that's when you should be fearful.
Back.
All right. Now let me take some of your questions before we bring the stream to an end. All right. I'm gonna scroll up because I really did not get a chance to read everything that was in the chat. All right. So I'm gonna start all the way at the top. Forgive me if I'm close to my screen. A nigga can't see no more. And I'm not about to wear spectacles. That just does not work with the brand. Not doing it. All right, let's check it out. Let's check it out. All the way to the top. All right. Let's see. Yeah, we're showing some weakness in the yen as well. JPY is is doing the things. I see someone is trading DPI in the chat. Shout out to Lebo_Mpete. Shout out my G. I'm glad you made it. All right, Blunt Tubes. Shout out to you. Still wondering whose account that is because, yeah. Bearberry, shout out to you, my G. Hope you're good, man. Sherwin Sheza says, so that's why on NFP we had US 30 selling and gold buying. I don't remember which part of the stream you're referring to, but the reason why US stocks tanked is because of that whole fear of the global recession, guys. When we are in a recession, there's low job creation, therefore less salaries, therefore less consumer spending, therefore less money flowing into the companies that make up the NASDAQ 100 and less money flowing into the companies that make up the Dow Jones 30. All right, so that's why we're seeing a broad sell-off on those assets, because investors are wondering where's the money going to come from to support customer or consumer spending in these companies that are listed on these indices that we're trading. That's why you have the sell-off. I hope that makes sense, man. That's for Sherwin Sheza. Hope you're good, man. Shout out to Selby. Right. Let's see. Blunt Tubes. What are you saying? Just sending emojis the whole time. Please text. Right. Shout out to Prince. I hope you're good, my brother, man. Prince the Beamer boy. Yeah. I think so. Yeah. All right. Let's see. Celia says, I see us rejecting on our current level, then continuing to the downside. I assume that is in relation to the US dollar index. I agree, sir. I agree. We are melting. All right. In the absence of a catalyst, the dollar will continue to melt. All right. We need something to get people to go into the dollar. And right now, there's nothing that's motivating people to go towards the dollar because we have interest rate cut expectations. And now it's pricing into a larger degree, all right? So we could get more interest rate cuts or to a larger degree than at first initially thought, which is hella bearish for the dollar, all right? All right, Queen Corona says, the Don Dapper Analyst. Your code is on fire, sir. That's what I'm saying. That's what I'm saying. That's what I'm saying. All right, Mr. Masako, I hope you're good, brother. Hope you're good. Oh, Kamo, I hope you're good. No questions from you today. I take that as if you understand everything I unpacked. All right, Mr. Masako says, 100% sell off the high, waiting for it to go low. Buy more than you ever did before. I keep saying, guys, this could be the opportunity we've been waiting for, all right? This is a COVID-19-like sell-off, all right? And when they sell off like this, it's time for us to look for the perfect opportunity to buy. But that will only be determined by the fundamental outlay and then using technical analysis to confirm and engage within that trade. But if I were you, I would go to cash converters, sell the car, sell the house, sell the farm, cash in the retirement check, and put it all on risk assets on a big fat buy and look away. And look away. This is not investment advice, all right? I am not a qualified investment professional. Who's JB Aaron RNA? Middle fingers. Yo! Guys, that's too. Imagine. Imagine. All right, shout out to you, JB. Middle fingers. What did I do? You should definitely leave the stream, sir. You are not welcome here. All right. Let's see. All right, Tonic says, unemployment change can move big Thursday. Definitely. I really think that the initial jobless claims is going to be one of the most important data sets to be unpacking this week. Like I said, it is the first glimpse of the labor market that we're going to get since NFP. All right? So it's going to be closely monitored. Usually we bat an eyelash towards it, but it has taken on a greater importance because now the balance of risks is closer towards the labor market. Take care, my G. All right. Snow for real says, do you think US 30 will sell again on CPI? I don't know, bro. I don't know. We're getting to a point where there's a narrative shift, all right? How can I put this? If we get higher inflation, okay, it'll mean higher interest rates potentially for longer, but no, that'll be nullified by the fact that the labor market is tanking. So we're about to get into a period where we're gonna need to reevaluate this narrative, all right? Bad news was good news for risk assets, but now bad news has become bad news for risk assets. So we need to find out whether good news will be good news for risk assets or whether bad news to a certain degree will help resurface or rebound some of these risk assets, all right? So we've got some work to do. But worry not, have faith in me. I will do the work for us, and I'll come here and I'll explain how we're gonna navigate this next period, all right? We've navigated the bad news is good news scenario very well in my view. I think that we've overall understood what's been going on in the narrative. We've known what to do with bad economic data. We've just been buying it, all right? Now we need to shift our understanding of the narrative and be in line with whether good news is good news or good news is bad news. Queen Caroline, I'm doing well today, man. Okay, Diallo Liu. Good news website suggestion, Mr. Swicey, Mr. W. Check Bloomberg, check investing.com, Forex Factory, FX Street, etc., etc. Any financial news source that makes sense for you. All right, even Yahoo Finance even works. All right, Queen Carolina, great question. What are your thoughts on buying and holding Asian stocks following the Tokyo and Taiwanese market crash? I would do that. One thing about the Japanese market, guys, is that it does not fall for too long. Okay? It doesn't fall for too long. All right. Mr. Masako says, what are your thoughts on the US economy regarding Trump and Harris? Who do you think will benefit the economy, as it seems like people support Harris but do not trust her capabilities in the economy? All right. This is pretty simple, guys. I'll go back to one of my favorite quotes from R. Kelly. You can change the frame. No, you can change the picture, but it doesn't matter if the frame remains the same. Okay? That's what the Democrats are doing. Kamala Harris was there during all of the signing of the bad policies that have gotten the US economy to where they are right now. All right? She was there. It's like Cyril Ramaphosa and Jacob Zuma. Cyril keeps saying Jacob was bad, but he was there. He was vice president. All right? He was privy to all those decisions. And that's why I keep telling people that we're not going to find anything new from the Democratic Party because their policies are not made by the president. They are made by the institution. Okay? So whether you vote for Kamala or you vote for Gavin Newsom or we get Joe Biden again, it is the same policy under a different person. And if you put your finger on the real pulse of America, not CNN, not the mainstream media, you'll find that Harris is deeply disliked and Trump is the outright favorite. It's just that mainstream media is pandering towards the Democrat, all right? Mainstream media is basically Democrat run, all right? And that's why there's so much negative reporting on Mr. Trump and such positivity and exuberance when it comes to Harris. And she's unqualified for the job, right? She's severely unqualified for the job. She hasn't even done her one interview since becoming the official Democratic nominee. How many interviews has Trump done? All right, she's pulling a Joe Biden and hiding in her basement and letting the news campaign for her. She's not saying anything policy-wise. She's just pandering towards virtue signaling, pandering towards the race card, especially the race card. The whole mainstream media mechanism is leaning so heavily on identity politics that it becomes clear that they just want people to vote for Kamala Harris because she's black and that she's a woman. And that's the most sexist and racist thing I have ever heard. All right. So that's my 2 cents on the U.S. election. All right, we've got Iceman saying, how are you looking on NASDAQs? We've been bearish since last week. Is there any upside momentum due to yesterday's volatility? I think that NASDAQ can still go down a bit more. Like I said, we're waiting for a catalyst. Once we get one economic catalyst that'll give us what the market is looking for, then I think we can go bullish on NASDAQ. Right now, I think there is a little bit of downside space, particularly retesting yesterday's low. We could come and test that level or break slightly below that level before moving on up again. All right. Mposa says, I'm learning a lot from you, bro. Shout out to you. Shout out to you, man. Thank you for being here. All right, let's see. All right. Celia Sai says, enough for the day. Shout out to the one and only biggest market analyst, Mr. YC, sir. I think I'm going to end the stream on that note, guys. Thank you so much for joining me today. It's been a lovely stream. I've enjoyed being here with you. We got everything today, including middle fingers. So I think it's been quite an eventful stream. All right. Never a dull day. Never a dull day. All right. Chef Tebe says, the regular worker really has got their influence back, definitely. And we're seeing that on the stocks, guys, all right? The stock market and the real economy are two different things, guys. Two different things. This one takes cues from this one. People need to spend money at Amazon, buy ads for Meta, buy Teslas. All of these companies are here on the stocks, but real people are buying and using their dollars in these companies. So you need people to spend in order for the stocks to go up. All right. So you need a healthy economy for the stock market to be sharp. That's the trade right now. Benji, you are late. Shout out to the most beautiful Luyanda, Miss Nene. Oh my gosh. All right. I think that's it for today. I've read through all of the comments. KD King Des says, damn, I'm also late. Bro, you missed out on a fire session, all right? Like I said, we had it all today, including middle fingers. So it's been quite an interesting stream, eventful. But yeah, guys, shout out to everybody in the stream. Fastest 30 minutes. I went for 45 today, all right? 45, come alive. Any last words before I vie? Let me know what your thoughts are. But yeah, in the absence of anything else, I think I can bid you farewell. I'm just waiting for you guys to let me know that you are sorted. Then I can vie. Shout out to you, miss. You. The less I say, the better. Logana says, what's your take on the Bitcoin comment? Can you please just repeat that, please? Divine says, do you have qualifications in economics? No, sir. I am self-taught. All right? I suck all of this out of my thumb. All right. Mashanza says, salute. Shout out to you guys. I think I'll take that as my cue. I think I'm good to go now, guys. You got everything you needed, right? Lemonade, let's shop. Let's shop about it. Speak now, forever hold your peace. Once I vie, I'm gone. All right? USDJPY, what are my thoughts? Man. Do I even have that chart on me? I don't. I don't even look at USDJPY, guys. Let me just pull it up real quick. Or let me just get thoughts from G47. Guys, thoughts on USDJPY? In short.
It's been very aggressive to the downside, so I'll say some accumulation.
They say some accumulation, right? And don't forget, one thing that could be in favor of the Japanese yen, guys, the US is on an interest rate cutting cycle. The Japanese yen is on an interest rate hiking cycle. All right, so that could be another reason why the yen might continue to outperform the dollar. Right, Fed's cutting rates, BOJ is raising rates. All right, something interesting that you guys may or may not know, the whole world basically experienced global inflation rises, all right? Except the Japanese economy. They did not get any inflation, which is why their interest rates were in negative territory for so long. And now they're just about to get out of that into positivity. So whereas all the global central banks are looking towards cutting their interest rates, Bank of Japan is looking at increasing them, all right, to prop up the market, all right? There's been deflation instead of inflation, all right? And that's because of decreased consumer spending. There's a lack of demand for people to buy goods and services, meaning everything is dirt cheap, which is bad for business. Therefore, they need to increase interest rates, all right? So there we have it. All right, I think that's it, guys. I think that should be it. Let me know if that that answer on the Japanese yen makes some sense. All right. Also, another reason why the yen is exuberant is because of the lending rate. All right. Borrowing money from the US will cost you something above 5.5%. Borrowing money from the Japanese and the equivalent will cost you far less. I think 0.8%, roughly, if I'm not mistaken, but it's less than 1%. All right. So you could, in theory, loan $1,000 worth of yen from the Japanese government, take that money, put it into Tesla stocks, have that money make money for you on Tesla stocks, and repay a lower rate of 0.8%, right? It's about the cost of money. And that's why we're seeing a lot of, it's either we're going to see it or we've already seen it, but there's a lot of demand for the yen because of the carry trade. We call that the carry trade, right? When you're basically trading the interest rate differential, taking money from this side for a cheap amount, deploying it that side for aggressive return on investment, and repaying that money at that cheaper value, particularly if the Japanese currency continues to depreciate, all right? So if you borrow $1,000 worth of yen from the Japanese and you move it over into US stocks, and then the yen crashes by 20%, that means you only have to pay back $800 of that $1,000. All right, so the carry trade is also happening. That's something you need to be cognizant of when it comes to the Japanese yen versus the US dollar. All right, but yeah, that's an interesting caveat. I think I'll talk more about the carry trade further on in the week, particularly if we continue to see some unwinding in as far as the Japanese yen is concerned. All right, boys and girls. Shout out. I think that's it. There's no more comments. I'm in love and leave you.